yesterday, the SPYs did get back above 258. Did give it a shot on the short side or into 258.30. Got stopped out. As we closed at the high, we're gapping lower this morning, but inside of yesterday's range. So yesterday's range was 257.20 to 258.50. We never quite touched this 257 area, tested it on the open, which is straight up, sideways, then up into the close. We want to keep an eye on 257.20 with the weakness here right on the open. Nothing different in terms of resistance, I don't think. Let's see. I mean, I still like this 258.30. This kind of band from 258 here as potential resistance. IWM. IWM made a higher low, right into 145.5, right on the open. You can see the big wick. They dropped it out. Here was the low from last Thursday. So you got your higher low there. It's still in a downtrend. Really need to see it close up in this area right here above 47.5 to break that. And that's it on IWM. All right, so a lot of stuff going on this morning. AAP, Advanced Auto Parts. So let's take a look at the daily to put this in context. They crushed EPS, but revenue wasn't so great. So that means they've kind of right-sized the business in terms of the expenses. And this one's down a lot. This one's down, let's see. And this is only the beginning of 2017. It was up at 168. So it got cut in half. Pretty steep downtrend. Then you had, I'm assuming these are gap downs on earnings, gap down on earnings, gap down on earnings where it filled the gap over the next few weeks. And then coming into this, earnings, it's gapping up. Oh, shit. All right. Let's see. It's kind of already made this move. So it was gapping kind of above this 93, and now it's looking like it's going to, before we even get to the open, probably come to the top of this range. Let's go to like a 30-minute. Sometimes this happens during earnings season where stuff will come down into a good area, and if you're not involved in the pre-market, sometimes you miss a big move. Now the problem with the pre-market is obviously not all stocks are very liquid. This one's traded a couple 100,000 shares in the pre-market, which is okay, not great. It makes sense, like, when a stock's beaten down and then they come out with really good numbers, it will gap down. So here's the last earnings down move right here. You can see it rallied back up to here and failed, and so it looks like this is what people are trying to target it up to. So that's fine. If it comes up to like 98.5 to 100 right on the open, I would think there's a pretty good chance it gets hit there. Will it come all the way back down to 93? I have no idea, but this is an area you definitely want to fade. So we're top down the pre-market here at 95, which we had on our sheet as potential resistance. It based above 93, and then took that out, and it does seem like it could whoosh right into 98 to 100 right in the open. If it does that and quickly comes back down, you want to watch a hold below a whole number usually is what suffices. This is a big distance from 95 to 100. So let's say it does get to 99 to 100, then comes down to 98. You want to see it fail at 98 and start to hold below, make a lower high or something like that. Then you can play it back down to this to 95 and then kind of see. We're on the conference call right now, which I guess that's probably going pretty well. The next one is IGT. This one absolutely demolished EPS by over 50%. So yeah, that's too long ago. All right, last couple of years, they ran it up to 32. This is nasty. It had already gone vertical here, so this was clearly a sell. This was a sell the news, kind of like Nectar yesterday. So it had gone vertical, gapped up on news. They crushed it, came back down to this consolidation area, then made the lower high at 28. This morning, the bid is 25.80 right now, which is right here, kind of where it broke down. That's in March of this year. So this is probably in some sort of earnings catalyst. Just got crushed right there. So that's where we are. We're right back into this area where it had consolidated in Q1 of 2017. And we have no volume really to, so let's kind of use 26 as kind of our guideline right on the open. 25.80, as said, there was some resistance there earlier in the year. Comes into 26 and fails and gets below 25.80 and play it for a little bit of a gap fill. Again, the EPS number crush was so huge. My thought process would not be this thing fills at all, but if it fails at 26, maybe it comes in $1 or something like that, and we'll kind of see what it does from there. The next one is SSYS. This one raised guidance by 20%, beaten down sector. Let's look at the daily. So it had rallied all the way back, same as Triple D had done, 17.5 to above 30, and it's been in a pretty good downtrend since then. Here's kind of what it looks like. The bid is 21.50 right now. Above this, below this. This is very messy in here. This is a pretty good picture. Okay, so it had a bunch of trouble here at 22, then broke above. Did I put that on the sheet? Yep, 22. Then I put 22.70. I was actually eyeballing on the higher time frame, but I think it holds up pretty well here in the 30-minute. And in this is this area here. So I guess I was thinking if it actually held up pretty well and popped on the open, this was the spot right here from above 22, 22.70 to 22.80. I would look to buy, if for some reason it drops out right on the open to below to 21. Let's see, I put 20.70 to 21 is kind of the range. So anywhere below 21 right here, I'd be a buyer. Playing it into this area right here. We can use 22 as an inflection right on the open as well. It pops above, fails, starts to hold below. You can look for that pullback into here, 21.30 to 21. Normally only does 1 million shares. It's going to do at least 2 million today. Just looking recently when the volume popped up. It did 2.5 million twice in the last month or so. So it should do decent volume. It's a lower price stock, so the spread. It looks like it trades. Let's see if it trades in nickel increments. Next one is TJX, which is probably a bet. Probably this one should have been before SSYS. TGX. So we had really good luck with Kohl's the other day on not really particularly bad earnings, and they gapped it lower and then went up for a couple of days straight before pulling in. So this one, what was the news? They lowered guidance by 10%. So this is actually worse than Kohl's the other day. So in terms of the fundamental catalyst. All right, so it was 82, then it was 80. It's actually holding up pretty well, extremely well. Actually, I guess these discount brands, some of them are just discount stores are doing really well. I mean, it's TJX is definitely not a dollar store. but they discount brand name stuff. I mean, I don't see why with that guidance it can't, take out these recent lows. Where's it now? 68.5. Okay, let's take a look at the 30-minute. So it already did it in the pre-market, but that doesn't mean it can't go back down there again, right? So let's say it fails. What do I have for resistance on here? Eesh, not till 71, 72. I'm going to say 69. This is how I always burn myself, but I'm going to look to see if it gets to this 69 to 69.5 and fails there. And if it fails there and then gets below 68, I guess it could be conservative and just wait for it to hold below 68. But if it holds below 68 and a play down to 66, 66.5 would be the way to go. I put 71, 72. So that's kind of where it broke down from a few weeks ago right there. Came back up, got to 72, and it looks like it, on this number, for some reason, it popped to 72 initially. I guess my inclination is, with the 10% guide down, is to look for it on the short side, but understanding, let me zoom in and see if I can give you my best feel. Yeah. So the way I look at it is I would nibble. If it popped right on the open to above 69, I would nibble here. And then if it got back down below 68.50, I'd probably, or 68.70, would look to add to a little bit. And my confirmation would be a hold below 68. And at that point, you'd look for the move right back to pre-market support right here, which is 66.70, slightly above the support area on the daily. DKS. So they raised guidance, right? Why is it down? 17 guidance, about 3% above consensus. Unless I wrote that down wrong. Maybe it's below consensus. I don't have time to look it up now, but I guess it's kind of important. It was higher than the estimates, and I'm not sure. So it's having a negative reaction. It had just based down here at 24 for a while, and coming into earnings, people bought it. Looking at this over the last few weeks, pretty wild up and down action. This catches my attention right here. 26. Higher low would be 24.50. So that's the first thing I would look at is 24.50. There you go. Thank you. Next year they guided lower. So. All right. So it's already beaten down meme. I guess the way I look at it is 25. If it pops right in the open to 25.60 to 26, look to see if it fails there at 26. Gets back down below 25.50. Support from the last couple of weeks. Let me just quickly check the daily on this. Shit, it's getting late. All right. So this was last quarter. It is very beaten down. Yeah, this is really beaten down. It doesn't seem like the guidance was that bad. I would definitely look for like that higher low, 24.50. See if you can get back above 25, and I play for balance. I mean, this is 60. It's down 60% right here from the recent highs or from about a year ago. Not saying it has to get to 29, 28, but I think playing for the balance. Roku. So Roku's getting out of hand. Day one, the buying right on the open is what got my bias to be long, but this is getting into a little bit of silly territory. I put on the sheet 46, 47, 50. Those are the actual levels based on yesterday's price action. Then I put, in case it takes out yesterday's high, big psych level would be 50. So, a failure, if this ends up being like a double top here, and then it starts to hold below 45, I mean, I would be looking for probably move to probably something like here, at least a 40. And then another wave would start below yesterday's support, which was 42. Just to put this in perspective, again, the buying was so heavy on the open on day one. That's why I switched my bias to long side. You can see the little, I don't think it'd still be long, and I probably would have hit at it yesterday when it went vertical or sold it. But these two red bars here when I was off the desk, that's what stopped me out. Then the next day trended cleanly, stayed above the morning pullback low. This is completely vertical, so this any reasonable person would be selling most of their position into this vertical move, trying to buy it back cheaper. We definitely have a double top situation potentially here. 46, 47. And then your confirmation is just a hold below 45. At that point, you play for a move down to 42, and then you see what happens at 42. At 42, it could bounce pretty viciously to 44, 45, make another lower high, and then come in some more. But ultimately, catching a move down to the high 30s seems pretty reasonable to me, unless this pulls a GoPro from a few years ago. You can check that chart from like 4 years ago. Nectar was the number one stock we talked about yesterday. You heard me shorting it at 41 on the open. It was a little bit tricky, but then it trended down the rest of the day. I hope everyone or most people made some short trades in it. And there's a reason why it was number one. It had run up 4 days in a row into the numbers. It was a little tricky, but the seller did step down. You can see the wicks. They kept on, oops, that's not it. The seller was here. And then it was tricky at 40. It looks like it was wicking, and finally took out 39.5 and then trended down for a few dollars. So again, it had just run up 4 days into it. And so that's the main reason why we were looking to see if it failed on the open. Because the news was good, right? So I guess for me today, this area right here, 38 to 38.70, would be where I'd be looking if it got a quick pop on the open to short it. And let's see if this continues down, takes out yesterday's low. I don't know if it's going to fill the gap, but look at what Weight Watchers did, right? We flipped it to long yesterday, Weight Watchers, so it was oversold. But this has got some more coming in to do based on yesterday's downtrend. MAT didn't really do much yesterday. I just wanted to put it on here just because it was very tight after the huge up move on the takeover bid. It failed at 18 in the pre-market. It failed there again middle of the day. Perhaps some people shorted it. I wasn't around for that. Looked like it was going to roll over here and come back down to morning lows, but it didn't. So 1730, 18. Pay attention if it gets outside of this area on either side. And then Tesla, you probably saw me jump into this. I've been waiting for it to break out of this post-earnings range. The prior day it did. I bought into this pullback, stopped. Yesterday it did. Bought into 305. I risked like $1 and it went up $10, so that worked out quite well. It's not. Let me just show you this quickly in the one in the meeting. Big down move. It's not holding below 300, right? It goes below 300, back above. It goes below 300, back above. Pre-market below 300, back above. So, when you see the strength again, and it's failed 4 times to roll over and take out the post-earnings low, it's gonna break one way or the other, right? The stock, it's a very volatile stock. So it broke to the upside. Once it broke above 306, went to 307.5, I just threw in a bid, $2 lower. It wasn't that complicated. Put in a stop, down here, and went straight up to 311, 312. Lighten up, sell to 315 this morning, buy 311, 312. Did I put that on the sheet? Yes, 311. Actually, I put 3,111, but that's supposed to be 3111 and 312.50 are the two spots. And good, it's already down this morning. So, and this is what Tesla normally does after it's strong. It usually comes down to the prior afternoon low. You think it's a good buy. They flush it through that. You buy it here, and then boom, you catch up the move to 316. Maybe it doesn't go to 320 today. Maybe it just goes to 316 again and bops around in this range. But that's the play. Maybe you walk into 320. I didn't have my options platform ready to go for that breakout yesterday, so I unfortunately didn't buy the 320 calls when it had that break above 305. If I had, I would have probably rolled those up to 325s or 330s by now for next Friday.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important? And how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.